For what feels like forever, the story around Tesla has been all about just unstoppable growth. But, with their big earnings report about to drop, that whole narrative has completely flipped on its head. Seriously, we're not talking about growth anymore. We're talking about a potential crisis, especially as competitors are starting to land some really serious punches.
Okay, so let's really dive into this. Because to get what's happening with Tesla, you have to look right at its heart, its core business of selling electric cars. And right now, that engine is, well, it's sputtering. It's under some very, very real pressure.
Just look at this number, negative 16%. In the last quarter of 2025, Tesla's vehicle deliveries actually plunged by nearly 16% compared to the year before. That is a huge miss, way below what Wall Street was hoping for.
And this isn't some one-off bad quarter either. For the full year, global deliveries landed at about 1.64 million vehicles. Now, that still sounds like a ton of cars, but the key thing here, the thing you have to watch, is the trend line. And for the second year in a row, it's pointing down.
So, you might be asking, what's behind this slowdown? Well, a massive factor is just this explosion of competition. We're seeing some really impressive sales growth from other car makers, especially out of China. Companies like BYD, who are just aggressively gobbling up market share that, honestly, once seemed to belong only to Tesla. Now, these slowing delivery numbers, they aren't just a headache for the PR team. They're translating into serious financial red flags for the whole company. The problems on the factory floor are now creating some real anxiety on Wall Street. Some are even wondering if this is going to be what they call a kitchen sink quarter, where they just dump all the bad news at once.
And this table really breaks down what the analysts are expecting. They're forecasting sales to drop. They're expecting net profit to plummet by almost 33%, and the company's net margin, that's how much profit they make on each dollar of sales, is expected to shrink big time. For a company that's valued on its growth, these are not healthy numbers at all.
Which, of course, brings us to the elephant in the room, Tesla's stock price. As analyst Gary Black points out here, it is really hard to justify this sky-high valuation. We're talking a price-to-earnings ratio of over 200. That means investors are paying over $200 for every single dollar of Tesla's annual earnings. That kind of valuation just can't hold up if your main business is shrinking. The math, it just doesn't work. And here's the absolute crucial point. While Tesla talks a whole lot about AI and autonomy and cool robots, the simple truth is that electric vehicles still bring in over 70% of the company's profits. So a decline here, it's not a minor issue. It threatens the financial health of the entire operation.
So this crisis in their main car business is actually the key to understanding Elon Musk's next massive move. It really looks like he's hitting the button on Plan B, which seems to involve pivoting the company's entire identity away from just being a car company.
And hey, you don't have to take my word for it. Here's the new narrative, straight from the source. Musk is actively trying to reframe the whole company. He's suggesting that its real value, its real future, isn't in the cars themselves, but in the artificial intelligence and robotics that are going to power them.
And this whole pivot is laid out in what he's calling Master Plan Part 4. You can think of it like a new strategic roadmap that just completely shifts the company's focus. So instead of just building cars, the vision is to create this future of sustainable abundance, where autonomous robots do most of the work, driving labor and energy costs down to almost nothing.
The absolute star of this new show is Optimus, the humanoid robot. It's designed to be this general-purpose machine that can handle all sorts of jobs, from the factory floor to inside your home. Musk himself has called it the largest product opportunity in history, tapping into a market that could, theoretically, make the entire car industry look small.
But, okay, that's the grand vision. Now let's get back down to earth with a reality check. Because a big vision is one thing, but actually executing it, that's where things get really tricky, especially when you look at Tesla's past performance with ambitious promises.
Just look at this timeline. It really shows you the scale of the ambition. The production goals for Optimus are just breathtakingly aggressive. From a few thousand units in 2025 to 1 million units per year by 2029, that would be a manufacturing ramp-up like we've never seen before.
However, the reality on the ground, well, it tells a very different story. We're getting reports that by the middle of 2025, they actually had to pause prototype production. The robots were running into some pretty big technical problems, things like overheating, poor battery life, and just not being able to carry heavy stuff. These are fundamental issues.
And we've seen this kind of gap between the vision and the reality before. Just look at full self-driving. On the one hand, you have some users talking about these incredible zero disengagement trips. But on the other hand, you have plenty of users saying that the recent updates actually feel like a step back, with the car making basic mistakes like crossing solid yellow lines. The real-world experience is still, let's just say it's very mixed.
So when you put all of this together, what do you get? Well, it leads to this massive, high-stakes gamble for the company, and a huge question for anybody who's watching this story unfold.
This really is the core conflict for Tesla today. You've got the car business, the part that actually makes the money, and it's stalling out. So in response, the company is betting its entire future on this visionary but completely unproven and speculative future in AI and robotics. Analysts are totally divided on this, and there's a lot of skepticism, especially when you remember past promises like that whole million robotaxis on the road by 2020 thing.
So what's the bottom line here? As that big earnings report drops, you really have to ask yourself this one question. Is this whole pivot to AI and robots a genius move to secure Tesla's future? Or is it just a desperate gamble to distract all of us from a car business that's quickly running out of road?